Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, this past week has been quite the doozy, so I'm sure you're all eager to get to your weekend. So, without further ado, let's dive right in at point number 3. And at point number 3 is Core PCE data coming in this morning. Now, the metric did come in right in line with expectations, increasing 2.6% year over year. Now, this is the smallest annual increase since about early 2021, so it's a great sign. In addition to that, this is the Fed's preferred inflationary gauge to go off of. Part of what aided that small increase is the fact that consumers did pull back in the month of January, particularly when it came to auto and vehicle sales. They weren't spending nearly as much. Now, we did see that services spending was a little bit modest as well, and what we need to figure out going forward is whether or not this is a sign of a weaker consumer going forward into 2025, or if this is just more of a post-holiday hangover. But as always, we will keep you updated every month with that inflationary data. At point number 2, a little bit of a new one we haven't talked nearly as much about in the past, it's cryptocurrency, particularly Bitcoin. For those of you that do not know, Bitcoin obviously is the largest, most well-known cryptocurrency out there, and it did just recently reach an all-time high about 6 weeks ago, a little over $100,000 per coin. Now we're updating you because Bitcoin has also fallen 25% since reaching that all-time high and has fallen roughly 15% just in the past week alone. Now, this is a byproduct of investors flocking to safe haven assets after there's been so much tariff threats being thrown out there. Particularly the most recent ones has been the Trump administration coming out announcing that they will proceed with the 25% tariffs on Mexico and Canada on March 4th, as well as adding an additional 10% tariff on all Chinese imports as well. So these are tariffs being levied against our 3 largest trading partners and could potentially risk kicking off a trade war, which is why investors are maybe shying away from that volatility that cryptocurrencies usually bring. And finally, point number 1, you all probably saw it the other day, it was Nvidia earnings. Now, Nvidia still saw very robust growth. They beat expectations on revenue, with quarterly revenues coming in at $43 billion. Also, with their newest Blackwell chip registering $11 billion in that quarter alone. This was indeed the fastest product ramp that the company has ever had. So it's quite astounding that they were able to do that. Now, the company did come out and say that they expect strong growth in 2025, but that there could be a risk of gross margins compressing a little bit as they continue to ramp up the Blackwell chips, and also issued that they could be impacted by tariff policies like we just talked about. And as a result, those shares sold off close to 8% after the announcement. Now, what this goes to show is that the market has extremely high expectations on Nvidia and really expects them to beat and raise seemingly every time. And if they cannot, they're going to be punished for it. And that's what we saw this week. And as a result, all semiconductors sold off along with it. Now, that does it for your top 3 points this week. Now, what are we looking to for next week? Well, next week we're going to be really dialed in on the labor market, particularly non-farm payrolls. So we're going to keep you updated on that next week. Now, that does it for this week's video. As always, if you have additional questions, reach out to your financial advisor. And if you do not have one, follow the link below and we'll get you connected with one. Or dive into the written week in review. But as always, please go and enjoy your weekend, and we will see you the same time next week.